Hi, I'm Max Keiser, and this is the Keiser Report, covering all the markets, finance, and scandals around the globe. Let's bring in Stacy Herbert. Stacy Herbert.
Max Keiser, I brought you a present tonight.
What do you got for me?
Here.
Oh! What is that?
Well, I'm calling it Stacy Herbert Sunshine in a Can. It's a little bit of a plutonium mixed with uranium because, according to this first headline, Max, a glowing report on radiation. Yes, apparently radiation is good for you.
Oh!
So this is Ann Coulter, and she wrote on her blog that, regarding Japan, the good news is that anyone exposed to excess radiation from the nuclear power plants is now probably much less likely to get cancer. We did recently discuss agnotologic capitalism, and this is a prime example of it. Either using fake science or misleading using science, because there is research into the effects of radiation that can be positive in very, 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 very low dosages, not a nuclear meltdown.
Right, well, arsenic in very low dosages can have some mild beneficial health benefits, as I recall. But, of course, you wouldn't want to swallow a gallon of it. And, of course, Ann Coulter, I mean, this is how the misinformation, what do they call it? Ontological capitalism.
Agnotologic.
Agnotologic capitalism, exactly. She's got the same kind of misinformation that gets people to think that radiation is good for you, man-made global warming is good, smoking cigarettes is good. It's manufactured ignorance.
Well, she wrote this on her blog, a little blog, which then gets amplified on Fox News if you look at this little video here.
Oh, right.
Glowing radiation, very, very good. But you are not down on radiation poisoning.
Well, it's not me. I'm citing a stunning number of physicists, and from the New York Times and the Times of London, there's a growing body of evidence that radiation in excess of what the government says are the minimum amounts you should be exposed to are actually good for you and reduce cases of cancer.
So that, of course, was Bill O'Reilly egging her on to, and you could even see in Ann Coulter's face that she's kind of laughing like she knows it's a joke. But that's the way they do it, is a shocking number, a stunning number of physicists believe I'm right.
Right.
And, in fact, it would be shocking if there were one that believed she were correct to say, go on to Fukushima. It'll be very good for you.
All right. That wasn't on the payroll of Fox News and everyone like Murdoch. You know, this is yellow journalism taken to, a radioactive extreme. It's radioactive journalism. You've got Murdoch, Fox News, Ann Coulter, Bill O'Reilly, who package dangerous lies and put that into the public space, hoping to protect the industrialists that they represent in their quest to dismantle the global economy and cause, genocide.
Well, you see a similar thing in this next headline. Most Britons describe themselves as middle class. This is from the Telegraph, and they say the nation's perceptions come despite the rising cost of living and fears about unemployment amid the fragile economic recovery.
Yes.
The last paragraph then goes on to note that actually, so 25% of Brits, less than 25%, even think they're working class, when in fact almost 50% are. This is the confusion with inflation. They think inflation's making them rich, not poor.
Right. You see, they can't distinguish what they do from, let's say, Goldman Sachs or Morgan Stanley, who borrow money from the government at 0% interest rate, speculate, keep all the profits, and put all the losses into the public domain, whereas the average user, the consumer out there on the street, uses their credit card to affect the persona of a rich person, but their debts never go away. See, JP Morgan and Goldman Sachs, they push their debts onto the government, who then pushes it on the people. But for somebody who goes into debt to affect the heir of someone with a lot of wealth, they don't understand that their debts don't go away. They're just being used as chumps, of course.
Well, all of these kind of combined in the next few headlines as well, in this confusion of what value or wealth is, and the confusion often caused by our own governments confusing us through misinformation. Sergei Alenikov gets 8 years prison sentence. As Zero Hedge puts it, the man who single-handedly almost stole Goldman's algorithm that could, quote, manipulate markets, that's according to the judgment, is now the person with the biggest prison sentence to come out of the entire financial crisis. Sergei Aleynikov has just gotten a 97-month sentence for doing absolutely nothing but copying some Goldman code that would never be recreated by anyone. In the meantime, the bank execs who should be in jail are currently benefiting from their co-opted Fed to allow them to collect taxpayer-funded dividend payments.
That's right. So the high-frequency trading code, or the algorithmic trading code used by Goldman to manipulate markets, to engage in high-frequency trading, to steal money every single day. Remember, they reported last year they had 2 or 3 quarters of straight profits, not a single down day, which is statistically impossible unless you're stealing using rigged markets. They, of course, are considered to be adding to the liquidity and market-making functionality, which are code word for smash and grab and larceny, and they are lauded as somehow adding to the economy. Meanwhile, this guy is exposing the real financial terrorist. He's a freedom fighter.
Well, a similar story is found in the next headline. British hacker jailed over £7 million virtual gaming chips scam. So this is Ashley Mitchell, 29. He broke into the Zynga mainframe, stole the identity of 2 employees, and transferred 400 billion virtual gaming chips said to be worth more than £7 million to himself. In reality, the guy sold 30% of the chips for £53,612, but they prosecuted him on what they could have been worth to him, which was £7 million.
Another freedom fighter. Now, we've been talking about Zynga for a while. They counterfeit money. They put counterfeit money into the system in the form of electronic, assetless, no collateral-based electron money that is diluting the value of the U.S. dollar, diluting the value. They are worse than the Federal Reserve Bank. A lot of people point to the Fed, and they say the Federal Reserve Bank is counterfeiting money, they're destroying the value of the dollar, and they use all of their banking connections to undermine the authority of the U.S. government. All true. But much worse is Zynga. Zynga is worse than the Federal Reserve Bank. Now, this story is incredible. They print up worthless electronic virtual currency. This guy hacks into the mainframe as a freedom fighter to stop the financial terrorism. Then he resells some on some open market for 50-something thousand in cash.
He sold them on Facebook to other people who want to use this to raise their virtual farms on Farmville or fight in the mafia wars, which these currencies are used. Now, this guy's lawyer said the loss to Zynga was impossible to quantify because the chips were virtual and the company could create as many as it wants. He also said that Ashley Mitchell had enjoyed little benefit and spent most of the proceeds on online gambling on other sites that used real money, which is an argument you could make for the whole U.S. economy. Anybody who robs a bank to steal dollars is just using it to fund their debt habits, and it's no fun anyway. So I'm not guilty of anything.
Right, and the point is that if the judge finds this guy guilty, then he should find Ben Bernanke guilty. What is the difference between Zynga and Ben Bernanke? Bernanke doesn't have any collateral in which to float trillions of dollars worth of worthless fiat money. The only thing backing up the U.S. dollar, as has been pointed out on this show by many guests, is the U.S. military. That is to say, there's no intrinsic value to the U.S. dollar. The only value is if you recognize this as a medium of exchange. If you don't recognize it, we'll bomb you, we'll kill you. It happened to Saddam Hussein. It's happening to in Iran, that if you don't use the dollar to trade oil and other commodities, we'll kill you. That's the only thing that backs up the U.S. dollar. That's the only thing that makes it of any value whatsoever. It, as a unit of currency, it's completely worthless. It's less than worthless. It's not even as valuable as a Zynga because people actually want worthless Zynga dollars to raise worthless virtual vegetables on worthless Farmville, part of worthless Facebook, which of course Goldman Sachs is taking public for $50 billion or more based on people voluntarily checking themselves into a casino gulag state known as Goldman Farmville.
Well, Judge Philip Wassel, in making his decision, said it is a considerable aggravating feature that someone hacks into systems in this way when so much business and personal finance is done using electronic means. Therefore, the sentence has to reflect on public confidence in security systems and online business when someone breaches security in this way.
No, he's completely wrong. Look at the Constitution. Look at what Thomas Jefferson had to say. I believe it's under Article 17, referring to copyrights. They should be of limited term and limited value. This is a copyright issue. And of course, the Digital Millennium Copyright Act, the Patriot Act, and all these guys who are destroying the intellectual property of the United States and the global economy using fake virtual currency that they're copying infinitely are challenging those who actually want to have real copies of real works of art and works of business ideas that are being pushed out of the intellectual property domain by these terrorists. Again, another freedom fighter takes on a corrupt judge.
You know, if this were true, if this judge were making an accurate decision that the use of these currencies can undermine the system, that they couldn't just be reproduced with a touch of a button, then we would see an effect of, say, Iraq, where $9 billion went missing like that. It just evaporated. And yet it didn't seem to undermine anything.
Excellent point. To my point, which is that the U.S. dollar is equally worthless and Ben Bernanke is equally culpable in an equally pernicious scam per this judge's definition, unless it's selective prosecution, which of course it is, in favor of the corporations versus the freedom fighters.
This also takes me on to the next headline. Are we about to see the first ever bonds backed specifically by the printing press? This is a headline from Joe Wiesenthal, legendary paperbug, who we just interviewed. Thanks to the Fed's ability to monetize the debt, to some extent, all U.S. bonds are backed by the printing press, but it's never explicit. Last night, news broke that Japan would issue rebuilding bonds worth 10 trillion yen, and it sounds as though they'll specifically be backed by the Bank of Japan.
Well, this is exactly what we're talking about. A central bank issuing electronic fiat nonsense and claiming it has value. It has no value other than the value to impose debt upon people, destroy the ability for honest commerce to take place with sound money, like gold and silver, and to further perpetrate the global enslavement of a population that is now turning against this form of virtual currency enslavement and revolting in North Africa, the Middle East, in Europe, in the United States, in Wisconsin, the global insurrection against banking occupation.
But there is a cost to it. There is a cost to printing up more yen, and that is to the savings, to the pensions, to those fixed incomes, to people's wealth, to workers' wealth, anybody who has to work for a living. It's no wonder that less and less people want to describe themselves as working class, because why would you want to work for a paycheck which is fixed, and yet the value of that fixed income is declining all the time?
Exactly, inflation. And why does Ben Bernanke, when he's in front of Congress, or these other central bankers, when they asked about inflation, they say that we don't see any inflation. In fact, we're scared about deflation. That's why we're going to print up another trillion of our fiat currencies to make our friends wealthy who trade it for fees and everyone else totally in debt as a slave. Thank you, Stacy, so much for being once again on the Keiser Report.
Thank you. Oh, well, thank you.
Don't go away. Much more coming your way. Welcome back to the Keiser Report. Time now to go to Washington, D.C. and talk with Ed Harrison, former diplomat, bond trader, and now a blogger at creditwritedowns.com. Ed, welcome back to the Keiser Report.
Thank you, Max. Good to talk to you.
All right, Ed Harrison, revolutions are sweeping the Arab world, sending oil higher. Japan faces nuclear meltdown, and the U.S. is about to hit another debt ceiling. Uses that momentum to launch another war. Putting aside the moral and strategic implications, is it a good idea fiscally?
I'm not as concerned about the fiscal ramifications because obviously it's not going to be as dire in terms of the outlays as compared to, say, Afghanistan and Iraq. I'm more concerned with what sort of what it means for instability, what it means for oil prices, whether or not this is the sort of permanent war status that that you expect to happen in the near future for the United States.
Right. Well, if you remember when the U.S. hit Iraq with shock and awe, the Chalabi and the Pentagon estimated the cost to be $50 billion. According to Joseph Stiglitz, that's going to come in now at $2 trillion. So yeah, of course, when they start these things, they always figure out that it's, just a few $billion, but it has a tendency to escalate quite rapidly. Now, Ron Paul has called this form of perpetual warfare, as you call it, military Keynesianism. Do you agree? And maybe explain a little bit about what Ron Paul is saying there.
What I think is actually going on is that you can look at it in terms of Kennedy's fall of great empires. The reality is that the United States after World War II was, on a relative basis, in a much better position than we are today. So the question has been since then is how to sustain some degree of economic power, and military power is a way to sustain that. Over time, what we've found is that the benefits of the military incursions haven't really accrued to the U.S. domestic economy. More, it's been the military-industrial complex. So we're at the point now where the benefits of the U.S. military far outweigh the costs in terms of money. For instance, the United States spends as much money on its military as the entire world combined. That's a huge drag on the U.S. economy in terms of alternative uses of that money, in terms of infrastructure building, education, things of that nature.
But that's been true for decades, right? There has been no cost-benefit analysis for America's military forays going back 30 years versus the unemployment, the infrastructure collapse, the educational fall-off, the health standard collapse, the falling of America's competitiveness around the world, the decrease in America's increase in infant mortality versus the other industrialized nations. There hasn't been a cost-benefit analysis to spending trillions on war for decades, right?
Exactly. So, we're in a long sort of haul toward, keeping the status quo going without the benefits accruing from that status quo. And you've seen the same thing with other powers. Eventually, there's some sort of incident which causes a rethink because the decline of that particular country has gone on. You look at the UK and the Suez Canal incident in 1956, how that was they realized at that point the jig is up. We can't really support this level of empire. We need to draw back.
Let's talk about quantitative easing for a second. Does perpetual war mean perpetual quantitative easing? I don't know if you saw Jim Rickards' piece recently on King World News, but he talks about how the talk about QE3 coming up in June is a misnomer because the Fed's balance sheet's roughly $3 trillion. So the maturing of the stuff they've got on their balance sheet already means perpetual QE-type money printing in perpetuity. Is that the case? And does perpetual war go along with this? Can you comment?
My thinking is that the political constraints for the Fed are a lot greater than the hyperinflationists and the people who talk about things money printing on end would say. You have a lot of people who say that you're going to have QE3, QE4, it's going to continue on and on. But the reality is that the Fed is constrained politically at this particular juncture. They're not going to be able to go all in and with QE. I think that we're done after QE2. The question is what happens if the economy or when the economy relapses? Will the Fed be able to up the ante and go for more, or will we have some sort of systemic crisis? And I think that politically they're so constrained that I wouldn't bet on a QE3 happening before some sort of systemic crisis happens.
No matter what scenario you paint, it looks like higher interest rates are coming at some point. And this, of course...
I don't know about that, actually.
Okay, so...
let's look at Japan as an example. The reality is if you look at the interest rates, as generally speaking, interest rates for longer-term maturities are an expression of the expected short-term interest rate. There's obviously some risk premium for holding assets that are longer dated, but the reality is that if the Fed has 0% rates forever, then there's no reason to expect 5 or 6% rates for 10-year bonds. So if the Fed signals we are not going to raise interest rates anytime soon, there's a huge arbitrage opportunity at that point for someone to go out into the market, buy up a bunch of long-dated assets, and then short them in some way with treasury strips or something of that nature. So the reality is that this whole argument that interest rates are going up is constrained by the fact that interest rates are 0% for short-dated treasuries.
Well, that sounds all semantic and pretty much hogwash, and that's why gold and silver is bolting higher. People who are buying gold and silver, like John Paulson, who's now going to be the richest man in the world very shortly, as soon as gold crosses 5,000, listen to your arguments and they say, what are you talking about? You're just adding more, you're just injecting trillions of credit with this arbitrage. Are you crazy?
No, not at all. There's a difference between currency depreciation and interest rates. Just because my currency depreciates by 15% or 20% doesn't mean that interest rates go up. You have a prima facie evidence with Japan. Just take a look at Japan. Do you see interest rates at 7%? I mean, these guys have 200% debt to GDP. And people like Rickards have been talking for 10 years that Japan is going to have some sort of massive debt spiraling. It's not happening. So right there, you have the evidence that it's actually not true.
Well, let the market decide. How about why not if the Fed steps? Hey, hold on a second there, buddy. How about let me get in here.
The market has decided.
Let me step in and ask my question. Let's say, why don't we have the market step up, have the Fed step back, and see what is the true demand for U.S. 10-year notes and 5-year notes out there in the marketplace. And now, if you take the Fed, which is the biggest buyer of its own paper, you've got Bill Gross at PIMCO saying, once the Fed is removed from the equation and Japan's no longer buying, China's no longer buying, there's no longer this artificial market, who's going to be buying U.S. Treasuries? How are you going to keep the interest rates artificially cheap then?
Well, as I just told you, if interest rates are 0%, you will have buyers. At a minimum, let's just paint a scenario. Interest rates are at 0%. The Fed stops buying. Asset prices stop being elevated. You have a systemic crisis of some sort. The United States, GDP swoons. Immediately, people will go to treasuries as because of the flight to safety. They'll go to treasuries over risk assets. You have a perfect scenario right there for a decrease in interest rates. And as I said, if the Fed says, 12 months out, the economy's looking bad, we're going to have rates at 0%. Obviously, if you're buying a 12-month, a 1-year treasury, why would you pay 3% for that treasury when, in fact, the Fed has already told you that rates are going to be 0%? It doesn't make any sense. All you have to do is do the math.
Do the math, okay? What you end up with is negative interest rates. And that's loss of purchasing power, and that's a reason to buy gold and silver, and that's a reason for hyperinflation as people completely lose faith with these fiat currency magicians and scoundrels in your town, Washington, D.C. No wonder you're viewing this in this way. You're being corrupted by inside the Beltway thinking.
Not at all. The reality is hyperinflation is a political it's a political action. It has nothing to do with the money. The reality is hyperinflation occurs in specific circumstances, and those circumstances are political. That is a loss of faith in the currency, tax evasion, foreign currency liabilities by the central government, and some sort of loss of productive assets. Those are the preconditions for hyperinflation. You don't get it just by printing money. You certainly can get currency debasement, but you don't get hyperinflation. It's not true.
All right, now Japan has announced that they're going to issue some reconstruction bonds that, for the first time in history that I'm aware of, they're going to be backed by the Bank of Japan. Now, is this the first bond collateralized entirely by the printing press in your knowledge, Ed Harrison?
Well, all bonds are collateralized by the full faith and credit of the governments that issue, in fiat currency. It's not as if it's backed by gold or silver. So obviously, the reality is for any particular bond, it could be monetized by the fiscal or by the monetary authority. Yeah, but they're saying that the bonds have no connection to the underlying economy. They're just going to print up a bunch of paper and use it as a medium of exchange, even though it's inherently worthless. I mean, that sounds unsustainable to me. But I know that you're a paper bug and you love paper. I'm not a paper bug whatsoever. Actually, I think that fiat currencies are not the way to go. I believe that actually we should go away from fiat currency, but I do have a better understanding of the money system, the fact that in a fiat currency system, none of the assets are actually, or none of the liabilities of the government are backed by anything other than the faith and credit of the nation that's issued the paper. The reality is they can always print out more money if they wanted to do so. That's true in the United States, and that's why hyperinflation, as I said, is a psychological, it's a political event. It's because of a loss of faith in the currency. As long as the legal tender laws are there, as long as you have to pay taxes in a currency, basically you have nowhere to go. That's the reality.
Okay, that's all the time for we have this week with you, Ed Harrison. And thanks so much for being on the Keiser Report.
Thank you, Max.
All righty, and that's going to do it for this edition of the Keiser Report with me, Max Keiser, and Stacy Herbert. I want to thank my guest, Ed Harrison of CreditWriteDowns.com. If you want to send me an email, please do so at keiserreport@rttv.ru. Until next time, this is Max Keiser saying bye, y'all.